Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time on this Friday.
Good afternoon.
Well, overnight on Wall Street, U.S. stocks continued their decline. It seems on dashed hopes that the Fed wouldn't move as fast as it did on rates this week, and the fact that Chairman Powell said they're going to keep at it. The only sectors with gains were healthcare and communications. What's the story in the global markets?
Yes, if you look at the U.S. market, it closed slightly down for Dow by about 0.35% on Thursday. But if you look at the S&P 500, it fell by 0.84%, NASDAQ down by 1.37%. Clearly, markets are quite cautious about what might be happening to the global monetary policies, particularly the U.S. side, given the fact that U.S. interest rate is extremely higher than other advanced countries. As you know, the Fed FOMC meeting time, they have raised interest rate by 0.75%, which is the third consecutive rise by a giant step. And they also even indicated that they might do another giant step of 0.75% rise in November, and then maybe another 50 basis points in December. And also, furthermore, in 2023, they are saying that they might raise interest rate to as high as 4.6% from 4.5% or 4.25% at the end of this year. So clearly, the pace of the rate hike is one of the fastest since the 1970s and the 80s, and that means is that puts quite heavy burden on economic outlook. That Fed Chairman Powell keeps saying that it is premature to relax monetary policy as long as the inflation numbers are extremely high, and that is negative in the longer run, and trying to cut that down as much as possible in order to create a longer-term growth rate potentials. And also they have revised accordingly to assume the unemployment ratio to be further higher in 2023 to 2024 to as high as 4.4% from a previous forecast of 3.9 and 4.1%. So obviously higher rate and also a slower growth rate is all putting pressure on the global market. And as long as that kind of pace is remaining, we're not going to see any possible recovery or start of the recovery until Fed changes its stance in terms of raising interest rate.
Well, here in Korea, stocks down again as well, another 1.8% plus for the KOSPI, almost 3% for the KOSDAQ. A slight gain for Samsung Electronics coming off of yesterday's new 52-week low. Tell us about the domestic market.
Right. In Asia, including Korea, we saw most of the markets showing a quite sharp slip. The central bank in various countries within Asia, including Taiwan, Indonesia, Philippines, all raising interest rate, and also obviously Korea in a position that it is lower in terms of the rates versus the Fed funds rate. So therefore, continuous burden in terms of the currency side. We did see that currency going up to 1410 level plus. And clearly, this kind of currency affects negatively in terms of the PPI numbers. We saw in August 8.4% year-on-year rise. Of course, it is easing from 9.2%, but 8.4%, that's extremely high, obviously causing the trade deficit to be expanding over the period in the future. So clearly, that is the biggest concern. While we are seeing a sharp drop of the export growth rate in terms of the DRAM sector, and therefore, obviously putting more pressure in terms of the currency movement. A lot of people are worried that as long as the currency level remains as such, and that the DRAM sector shows a significant drop due to the economic slowdown, people are worried that the overall growth rate of Korea will be highly affected, and therefore that is affecting the overall market to fall. We did see KOSPI going down by 1.8%. KOSDAQ is down by 2.9%. If you look at the overall net buying, we see that happening only by the local retail investors. but most of that net selling is coming from the foreign investors in terms of the KOSPI and KOSDAQ and the futures market.
Right. Well, sticking with the currency, you mentioned it going up to 14.10 against the dollar, and you know, we've got that as the key psychological threshold. It would seem 1,400 back, of course, in 2009, which is the last time it was at this level. It got up to 1,550, or even a little higher than that. So, you know, could you talk a little bit about where you see the currency going, how long it might take for this to unwind?
Yes, I think that really what matters is what happens to the dollar index. Despite having one of the highest level of the government debt to GDP ratio of U.S. At 140% level, we continue to see that Fed raising interest rate to the speed and extent that is much higher than most of the developed economies. So therefore, most of the people are putting money into U.S. rather than any other countries, and saying that that is a much more safe haven given the fact the high interest rate environment. So as long as the pace of the interest rate hike continues, dollar is not going to weaken. We were hoping that 75 basis point rise to slow down to 50 basis points and even further. If that happens, given the fact that the pace of the rise is faster for other economies such as Europe, then the dollar can depreciate. Without that kind of trend, obviously, we're not going to see Korean won to appreciate in the future as long as the dollar strengthens continuously. Hopefully, we will see some indication that the Fed rate hike will be slowing down in the future starting November after the 75 basis point hike again. If that happens, then starting that point, we will see the currency, the dollar depreciating and Korean won appreciating. But until then, we got about a month plus. We don't see any reasons why the Korean won can appreciate unless we do some kind of currency swap or some kind of government intervention. We will see how that plays out. In any case, the pressure to further see the Korean won depreciating to maybe as high as 1,450 to 1,500, that is kind of a bit of open at this point, unless we see some kind of drastic measure by the Korean government and some kind of a deal made between U.S. and Korea.
Right, which did happen back during the global financial crisis, the currency swap. We'll have to wait and see. It sounds like we're going through the end of the year on this situation. Mr. Yu, we'll have to leave it there, though. Thank you, as always, for coming on the program, and have a great weekend.
Thank you. You too.